Hello, everyone. Oscar Ortiz with the Sebastian Strong Foundation. Before we get started, I just want to give you a little background on the foundation. I'm the executive director of the foundation. It was started in 2017, shortly after I lost my 16-year-old son, Sebastian, to a rare form of cancer. Our mission is increasing awareness of childhood cancer and raising funds for less toxic, more targeted treatments for kids. To date, we've had an impact of over $6 million in research, funding primarily discovery science. These are projects and options that wouldn't exist otherwise, providing hope to families who have no options. And to learn more about the foundation, please go to our website at www.sebastianstrong.org. Today, we're recording our third annual Sebastian Strong Spotlight on Community Superheroes. Here at Community Newspapers, I want to thank Grant, Michael, and the entire team here for their continued support of our work. With me today is Al Maulini. He's the founder and managing director of private wealth management of Coral Gables and also a senior portfolio strategist with Raymond James. I wanted to make sure I got that right. Al holds certifications as a certified portfolio manager, a certified financial planner, and a certified exit planning advisor. So this guy knows investments. He's got over 40 years of experience in the industry, holding leadership positions at Citicorp, Wachovia, HSBC, and Morgan Stanley. Al is also a friend and a supporter of Sebastian Strong, and he and his team are going to be hosting a Sip and Learn wine tasting on September 26th next month at his offices in Miracle Mile, with the topic being charitable giving strategies, which is part of why we're here today, and more on that at the end of the show. Al, thank you for being here and for your support through the years for the work Sebastian Strong does. A few words from you.
Thank you, Oscar. Good morning, and very happy to be here, mainly because I love the cause. Sebastian Strong is a terrific cause, a terrific charity. So I was looking forward to this meeting this morning with you, and possibly in my way doing whatever I can to help and educate people in this area, because it's a pretty broad area.
Yep.
And there are some misconceptions. Maybe I can clear a few of those up this morning.
Yep.
If you'd like, I can go into the background a little bit of myself and my team.
Please.
40 years in the industry, major firms, all here in South Florida. I actually grew up in Michigan and came down when I was 17, but I'm a Miami guy at this point. I'll be 63 in October, and 40 years in the business in October. Private wealth management is located on Miracle Mile in Coral Gables. Kind of obvious because it's a storefront, and there's a ticker tape and a bull, and you'll for sure see it from the street. But we're an 8-man team. Everybody just, really, I'm blessed, high-level people, terrific team.
I've had the good fortune of meeting them. They're good people.
Thank you, Oscar. And again, the Sip and Learn, and like I said, I'm going to go to school on you on that name. I like the name, Sip and Learn. It's a wine taster and a seminar, and we'll talk about Sebastian Strong. We'll have an estate planning attorney there, and then we'll give a piece on money management and maybe an update on the economy and what's happening and different things that we can do there. And you'll really get to know Sebastian Strong, and you'll get to know my team, which is terrific.
Yeah, I'm looking forward to it. I've had the pleasure of attending a couple of those, and they are great shows. So before we get underway with the Q&A, I've got to share, and I'm going to read this verbatim, is the information contained in this podcast does not purport to be a complete description of the securities markets or developments referred to in this material. Any opinions are those of Al Maulini and are subject to change, and not necessarily those of Raymond James. So coming from a CPA background, from working from the CPA firm for 18 years, I understand the importance of that. So let's get going. Now, there's no way the nonprofit community can exist without the generosity of the public. The goal today is to provide existing donors and potential donors more insight as to how they can support the charities they believe in. So with that, I'll jump straight into it, Al. What are some of the most tax-efficient ways for individuals to make charitable gifts to nonprofits?
Yeah, I think it's important to mention this first, and that's your heart. I mean, money aside, what a beautiful thing that you can leave a legacy to your favorite charity, that you can help them. And really, that's the bottom line, that's what it's really all about. Now, that being said, there are many different ways to do it. The simplest is, of course, just a donation. You have a tax write-off. Pretty straightforward. Also, appreciated assets. We've had a great market in my field and a great real estate market. You have an appreciated asset, and you bought, in my field, ABC stock at $50,000, and now it's at $500,000 or $1 million. You've had a big run-up. You don't really need it for personal use at this point. You have a big taxable event. If you sell, you can take that appreciated asset, donate it to your charity, and now you are basically getting a tax benefit at the current value. Then the charity receives it. They sell it. They do what they need to do, and there is no taxable event for them, and everybody is happy.
Yeah, that's a significant piece, because if you're saying, like, it's this ABC charity, let's say it's got in that case, 50,000. You're in 50,000. You're selling at 500 is the value. That 450 is a significant taxable event. Should you sell and take it and not donate it, if you will? So that's a significant. I mean, you're talking 90,000 using 20% capital gains. That's $90,000.
Absolutely.
Additional money of additional impact to a charity is really, it's two ways. It's obviously the tax savings component, but also the greater impact you have on the charities that you support.
Absolutely. And again, that's a straightforward way, but there are even ways you can benefit beyond that we can discuss. But also donor advised funds.
Yeah, that's my next question. Yeah, my next question leads right into it. It's explain the benefits and the drawbacks of a donor advised fund, or DAF, as it's so often.
Perfect. So I have a donor advised fund. And first of all, if you have a donor advised fund, your CPA is going to love you.
And for the benefit of those who may not know what a donor advised fund is, Al, just at a basic level.
Sure. So you have a foundation who's a 501c3, and it's like a hub and spoke, and they build these almost like mini foundations at a fairly low cost. And you plug into the major foundation, and now you donate your money to the donor advised fund. And it acts kind of as a funnel, where before I write a check to this charity or give some stock to this charity, and I'm kind of all over the place. Now everything goes into my donor advised fund. It's a funnel. And then from my donor advised fund, the money is distributed. Okay. Very clean. And then your write-off, it happens immediately when you go into the donor advised fund. It's a very efficient, low-cost way of doing it, and that's why I chose to do it that way myself.
Yep.
Okay. And then at that point, now the money is housed inside the donor advised fund, and you can distribute it to the charities as you so please.
Yeah, and the accounting, like you said, the accountant will love you because all of your records are in one place. You don't have to reach out to all the charities. You read, hey, I need my tax receipt.
Exactly. And there are a number of different foundations that are great that specialize in this.
Okay.
I get the restriction there would be now once it's in the donor advised fund, it must go to a 501c3 at that point. So it actually that's good from a compliance perspective.
Right.
There's not going to be any funny business where you're using it for whatever source. It has to go to a 501c3. If it goes in there, it's going to a 501c3. Yes, and then the 501c3 typically is vetted by the foundation.
Correct. We've had to fill out several, just their questionnaires and annual kind of updates to make sure we're in compliance with whatever their standards are. So, because we do receive some gifts from donor advised funds from some of our donors. So, yeah, and it is very clean. And even from an accounting standpoint, we recognize the fund as the giver, and then we notate somewhere, the gift came from. Sometimes they're anonymous, but the name of the individual, to make sure that we as a foundation can track that this came from Al Maulini, even though it came from the donor advised fund.
Exactly. And then for me personally, I mean, that or a private foundation. Now with a private foundation, you have administrative costs and other things, and that could be heavy, where the donor advised fund, even though there's fees, for me, they're actually fairly light for what I receive.
Correct. Yeah, I mean, there's a service, there's a value there. How can clients incorporate charitable giving into their overall financial and estate planning?
Many different options. The donor advised fund, one option. Let me touch a little bit on charitable remainder trust. We call them CRTs in the business. Charitable lead trust, we call them CLTs, which are interesting, and maybe how to tackle a large IRA through qualified charitable deductions. Okay. In fact, let me hit that one first.
Okay.
Okay. Qualified charitable deductions. Once somebody's over 70 and a half, they have to make distributions from their IRA. They've done the right things. They've built up a large retirement plan, but now they
Got to start using it.
They have to use it. And one of the options is those distributions can flow directly to a charity. So now you must take a distribution. You don't want to, but you have to do it.
Right.
Okay. And but you don't need it. And an option would be to do a qualified charitable distribution directly to the charity. Okay. There's a limit to that. The limit right now is $105,000, so it's pretty ample.
Right.
Okay. So anything below $105,000, that distribution can go directly to your favorite cause.
Okay. And in many cases, those are, if people have an IRA, someone who's worked an IRA and they've worked for a long time, these are highly appreciated assets in many cases. So these are good targets when they have to distribute at that 70 and a half. Correct.
Correct. Also, so if you hear QCD,
okay,
they're talking about that. And again, some of the restrictions over 70 and a half.
Yep.
And $105,000 limit.
Okay. All right. Those, I mean, I mentioned to you, my mom is one of those who's over 70. She worked for a long time and she got mad. She's like, why do I have to cash this out? I'm like, Mom, they need you to, they want the money used.
Exactly.
The government gave you the benefit for this time. Now they want it used in your lifetime. These are all actuarial calculations that they want you to spend it before you go.
Yes.
And then you mentioned estate planning.
Yeah. So charitable remainder trusts are interesting too. That's one of my favorites. So in a charitable remainder trust, you donate cash or a highly appreciated asset into it's called the CRT, and you get an immediate tax benefit. But you can also create an income for a period of time, even for the rest of your life.
Okay.
And then that money, when you pass away, then goes to your charity. Terrific, because from a tax perspective, immediate tax benefit, you still benefit from the actual portfolio because you'll create a stream of income. The charity, it's terrific for the charity because they create an annuity.
So let's walk through that, Al. You said someone makes a $500,000 investment in a or $1 million investment, because easy numbers, in a CRT. So that money is put aside, and now it's, as you said, it's an annuity. It is kicking out a return on a monthly basis, quarterly basis, just for the benefit of those who may not.
You set it up whatever way you'd like. There are restrictions. Typically, it'll be right in the 5 to 6% area.
Okay.
Of income for the remainder of your life. You get the immediate tax benefit. It is irrevocable. You have to know that. So once it's done, it's a done deal.
Okay.
Okay. And the charity doesn't get any immediate benefit, but their benefit is knowing, hey, that money is targeted. When this person passes away, that money is targeted for us.
Okay.
And the charity wants to continue.
Correct.
And this is a good way for the charity to continue.
Absolutely.
And
the tax benefit is up front is front loaded, if you will, for the person.
The tax benefit is up front. You remove it from your estate.
Okay.
Okay. Again, highly appreciated securities also. Yep. So you don't suffer the tax consequences of, you don't have to sell the stock and pay taxes and then make the donation. You move the asset into the charity. And then you have an income benefit. So you can still benefit from the actual security or portfolio. And when you pass on that goes to your charity, and they create an annuity, and you create also a legacy.
Correct.
Okay. You live beyond your life through your donation that you made to the charity, which could be important for you too.
And charitable lead trusts, how do they differ from?
It's kind of the opposite. So a charitable lead trust is where now again you're removing it from your estate. Okay. And then you're giving the immediate benefits, the income from that portfolio to the charity, and they're using that income. It's kind of the reverse of a CRT. And then when you pass away, that can come back to your heirs, to your family, the actual portfolio or security.
And depending on the structure, this also allows for for one to increase right now, what is the estate limit for taxes for couples, 11, 12 million, somewhere in that range?
It is, and then that's subject to change. But again, you remove it from the estate at that time.
So it allows for people to, I'm not going to say exceed, but to protect the assets beyond, from a taxable basis, beyond the 11 million through this separate vehicle.
That's correct.
Okay, perfect. What other strategies can high net worth individuals use to maximize their charitable impact while maximize their charitable impact while minimizing their tax liabilities?
Well, we've discussed 4 good ones: the donor advised fund, the charitable remainder trust, qualified charitable distributions, and a charitable lead trust. Also, bunching securities. It doesn't have to be done in 1 year, so you can control depending on the advice of your CPA.
Correct.
By the way, everything is with the advice of your CPA.
Absolutely.
I should throw that out there. And these are all 4 excellent options.
Yep.
That you can choose.
Okay. Let me slide through here. How should clients approach the decision between making a one-time large donation versus smaller recurring donations?
Again, work it out through your CPA. I mean, that's how do we distribute year to year? What is your taxable income that year? I mean, typically when a client works with us, they're going to have a full financial plan, and we can give them some guidance along with their accountant, and that really depends on their specific situation.
Okay. And when you're advising clients on setting up a private foundation versus contributing to existing charities, sort of what are some of the pros and cons as you talk to a client and say, here are the options?
The private foundation, you have a lot of control, and that's really the major benefit, in my opinion. The negatives being administrative costs. It's going to be a little bit more costly. That's why, in my case specifically, I use a donor advised fund. Okay. You're in compliance with a donor advised fund. You have to make sure you monitor that with your private foundation. It's a little bit more like setting up your own company, in effect. So you have to make sure you're in compliance. You have the administrative costs. Have the correct accountant.
The scale to do it.
It's more scale. Typically, the private foundation, I think of much larger. Okay, even though you could be very large and use a donor advised fund.
Right. Okay. And then as we start to wrap this up, in terms of when you talk to your clients, how do you help clients align their philanthropic goals with their investment strategy and risk tolerance?
So for me, and in my field, the important thing is to know the client. And one good way to know the client is through a full financial plan. And other than that, we tend to become pretty close with our people. and then that way I'll know what their financial needs are. But in terms of what we're speaking of today, where's their heart? How important is it for them to, help this cause, leave a legacy? We're not immortal.
Yep. Okay.
So is it important for you to leave a legacy for you, for your family? These are things that we talk about.
And I guess I'm adding one more question, because with that, there's been an interesting shift with some of the giving pledge and more of a focus on people giving while they're here, because traditionally we've thought of giving happening after one has passed on. You're seeing a little more of people using, particularly the ultra wealthy, using that money while they're here, so they can see the fruits of their labor, their support. Are you seeing some more of that in your client base?
Absolutely. We have a big focus on charity in my firm, and we are seeing a lot of that at all levels. By the way, you said ultra wealthy, all levels.
Okay.
Because people like to give back, but they like to give and help.
Yep.
I mean, that's part of what we do, and for sure, when you front end this during your lifetime, you're going to see what legacy you're creating right now.
Yep. Yeah.
And that's very important.
It's definitely, in talking to, there's a generational shift in this, because traditionally it was, parents, my parents they're not, they've worked hard. The typical Cuban, the story. They came here, made a life for themselves. My provided a life for me and my three brothers. Is, they want to wait until I'm like, Mom, Dad, do stuff now. Like, if it's helping one of your grandkids or something, you want to spend the money, enjoy it. Like, thankfully, you've put me and my brothers in a situation where we fend for ourselves. We're okay because of the hard work they did. So encouraging them to spend it, if you will, now and enjoy while you're here. It's an interesting shift for them because they grew up through times where there was a lot of turmoil. They lost everything in Cuba and kind of start all over. There's a little more hesitancy, but I'm like, you guys are going to be okay. Enjoy some of the stuff now and don't worry as much. Yeah,
and part of my role is to make sure that people are buttoned up from that perspective. Beneficiaries, a will, a trust. It's amazing. Some people are not buttoned up,
yep.
And even at higher levels, and they're not buttoned up. So it's important to have all that taken care of now.
Yep.
Okay.
Yeah. Before the crisis.
Exactly.
Yep.
Exactly. And then charity plays into that. Again, where's your heart? How important is it for you to help this cause and to leave a legacy?
Yep. Well, thank you, Al, for sharing your time, your knowledge, and your thoughts on charitable giving strategies. For those of you that want to learn more, you'll have our emails and contact information at the end of this presentation. And you can also come and learn a little more in person. As I mentioned, Al and his team are hosting us on September 26th at 5:30 in the evening at his offices on Miracle Mile for a sip and learn wine tasting focused on charitable giving strategies. We'll be hearing from Mildred Gomez, who's a tax and estate planning attorney and partner at Bills & Sundberg. The presentation is geared towards those who are interested in learning more about how they can more efficiently and effectively support the charitable causes they believe in. We've got a limited number of spots, so if interested in attending, email Al or myself. Again, you'll see the contact at the end of the presentation. Again, thank you again for being here, Al, and for sharing. And to learn more about the foundation, SebastianStrong.org. Thank you all so much and have a wonderful day.
Thank you.